So what if I told you that the tax benefit you've been chasing your entire career might actually be costing you hundreds of thousands, if not millions of dollars? I'm talking about your 401k as a US business owner. Your traditional IRA, every tax-deferred account you've been diligently funding for years, you've been told that you're saving on taxes. You get that deduction today, you feel good about it, and you move on. But here's what no one tells you. You're not saving taxes, you're just postponing them. And in many cases, you're postponing them into a larger tax bill, not a smaller one. I'm Joey, co-founder of Preserve Wealth Group. After 5+ years of working with the top 0.1% financial professionals who serve 7, 8, and 9-figure business owners, I've seen this mistake over and over again. And today I'm going to show you exactly how it works with real numbers. So let's break down what actually happens when you contribute to a tax-deferred account. When you put money into a traditional 401k or an IRA, you get a tax deduction today. If you're in a 35% bracket and you contribute $23,000, you might save around $8,000 in taxes this year. That feels good. You see a smaller number on your tax return and you think, let's go, I'm saving money on taxes. But here's what's actually happening. You're not eliminating taxes, you're just postponing them. That money is going to grow for 20, 30, maybe 40 years. And when you withdraw it in retirement, every single dollar, including all the growth, gets taxed as ordinary income. Let me give you an hypothetical example to illustrate the concept. Imagine a business owner who diligently contributes to tax-deferred accounts over their entire career. Let's say those accounts grow to $2 million by retirement. Now they start withdrawing. If they're in a 30% combined tax bracket, federal plus state, they could owe $600,000 in taxes on those withdrawals. So did they save money on taxes, or did they just delay paying taxes and end up paying taxes on a much larger sum because the account grew? So here's the question most people never ask. Would you rather pay taxes on the seed or pay taxes on the harvest? With tax-deferred accounts, you're paying taxes on the harvest, the full grown amount, not the seed. Now, let me show you how tax-free works differently. So properly structured life insurance, for example, under IRC Sections 7702 and Section 101, is one of the few vehicles in the tax code that offers this combination. 1, cash value can grow without being taxed each year. That's tax-free growth. 2, you can access the cash value through policy loans, which is generally not a taxable event. 3, death benefits pass through your beneficiaries completely income tax-free under IRC Section 101 when structured correctly. So here's what happens. Money goes in either after tax or through business deductions under Section 162. Money grows without annual taxation, and money comes out without triggering income taxes through policy loans, for example. So money passes to heirs without income tax. Compare that to tax-deferred. Money goes in with a deduction, money grows on tax for now, but money comes out and every dollar gets taxed. So there is anything left, it passes to heirs who then pay taxes on it. So here's how I think about it. With tax-deferred vehicles, you're just forming a business partnership with the IRS. They're your silent partner in your retirement account. You cannot see them, but they own a percentage of everything you've accumulated and they will collect. With tax-free vehicles, you're paying upfront or creating deductions through business structures, and then you get to keep the growth. No silent partner, no future claims on your money. Now, let me be balanced here, okay? Tax-deferred vehicles aren't bad. For many people, and for the majority of people, I would say, they make sense. If you expect to be in a significantly lower tax bracket in retirement than you are today, deferring taxes could work in your favor. So you're essentially moving income from high tax period to a low tax period. And this is part of why you hear about those strategies more often, because let's be honest, 99% of the population deferring taxes is the best move for them, because not everybody has a business, not everybody expects to make significantly more income in the future. But here's what I've observed working with advisors who serve successful business owners. most of them don't end up in the lower tax brackets in retirement. Think about it. They built successful businesses, right? I've got a business myself that I'm thinking I'm going to be in much higher tax brackets later on, and I assume the same is for you if you're watching this video. They have investment income, maybe rental properties, maybe they're still consulting or sitting on boards. They're not living on Social Security alone. So for these business owners like you and I, deferring taxes often means deferring into the same or even higher tax brackets, while also giving the IRS a larger pie to tax because of decades of growth. Plus, and this is very important, tax rates in the future are not guaranteed to be lower. They could be higher, we don't know. So the question needs to be, do I honestly expect to be in a meaningfully lower tax bracket in retirement than I am today? If the answer is probably not, then you need to seriously evaluate how much of your wealth building is happening in tax-deferred vehicles versus tax-free vehicles. So what I shared in this video is one chapter of a much bigger playbook. So understanding tax-deferred versus tax-free is critical, but it's just the beginning. You also need to understand the specific tax code sections that make this possible, how business owners in the United States can structure deductions while building tax-free wealth, who actually qualifies for these strategies, and how to find professionals who can implement them properly. I break all of this down in my full video, which I call the Complete Tax-Free Wealth Playbook for US business owners. It's about an hour long, no fluff, no sales pitch, just a complete picture to give you guys the value and education you need to make the right decisions. Link is in the description or just find it on the channel. If this opened your eyes to something you hadn't considered before, please, the only thing I'm asking is hit the subscribe button if you're not yet subscribed. Share this to another business owner so they can get the value as well that you just got. This is the kind of content I create for business owners who want the real strategies. See you guys in the next one.